All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr coming to you from the live trading room in Discord. And if you want to join us in an amazing community of 250 or so traders that are at all levels of experience, you want to see what I'm trading throughout the day, and you want to hear from me as on every afternoon when I'm talking about the charts. You're welcome to join us. Go to drstoxx.com, DRSTOXX, your one stop shop for all things trading, and click on the live trading room button right there at the top of the page, and you will be good to go. You can join us right away. If you need a trading system, go to manuals. If you need to learn how to trade for yourself, go to webinars. And if you want to subscribe to one of my award winning trading advisory services, click on subscribe. All right, we're going to jump over to the charts, and we're going to go first to my index list and take a look at what's going on in the major indexes. Always good to do this. I do this every day. I scroll through hundreds of charts throughout the day, always looking for opportunities, looking for trends, looking to see if there's certain sectors that are stronger than others and weaker than others. And boy, when you start to do that day in and day out, you get a pretty good feeling for what's going on in the overall market, where the money is flowing and where money is coming out. You need to do that. You need to do that. You need to spend time with the charts if you're going to be successful trading over the long period of time. And if you don't have that kind of time, then join us in the live trading room. I'll do that work for you. All right. So here's my thought. We've had this really nice bull run all throughout 2024. We're coming to the end of 2024. We're up about 20 something percent year to date. The market is now ready finally, to take a little bit of a break. Now, whether we go sideways as consolidation, whether we pull down toward the mean averages, or whether we crash and fall off the cliff, has yet to be seen. But I do think we'll get some kind of a pause before we resume the dominant trend and get back up to the upside by the end of the year. That's the path of least resistance. What the charts are telling us is that something like some weakness will come about this week, maybe into next week. On Wednesday of this week, this is the 9th of December, by the way, 2024. In 2 days, we get the CPI. In 3 days, we get the PPI and the jobless claims. And those are all things that can shake up the tape a little bit. And we'll see where things go. All right, let's start with the S&P 500. So we've been watching the series, the sequence of let me put one more arrow here, right there. The sequence of bearish divergence indicators. You don't see any positive or bullish divergence indicators down at the bottom of these pullbacks. We're up at the top of another one. It signaled a couple of days ago, so that would be Thursday of last week. Didn't get much of a follow through on Friday of last week, but now we're starting to see that play out. Doesn't matter that it takes a couple of days for that to play out. It just matters that we get some kind of a resolution of the overbought with bearish divergence in the momentum indicators that we're at right now. That's where we're at with the S&P 500. Now keep in mind the S&P 500, the Nasdaq 100, these are driven by the Mag 7 stocks at the very top, the biggest corporations on the planet. And these are weighted indexes. And so when those guys aren't really healthy, the indexes will tend to fall down. And we're starting to see that, especially in the semiconductor space, where some of those plays, and today we're seeing it in some of the software names, getting a little bit on the weaker side. So we need to be careful. And in the live trading room, we are in fact already short the S&P 500, and we are also what did we add today? We did add something. Yeah, we're short the BULZ in the form of its inverse fund, which is BERZ. Now, by the way, this is a good point to make, and not everybody is quite aware of this, but there are two major funds. In fact, they're both managed by a friend of mine who's in the managed fund business. But there are two major funds that if you just buy shares of those funds, you're really buying shares in the top 15 or 20 stocks at the top of the weighted indexes. So you don't have to trade the whole S&P 500. You don't even have to trade the Nasdaq 100. You can trade the top 15 or 20 stocks by buying either FNGU, that's the slightly larger one, has a slightly different mix, tends to be a little more focused on software names, and the BULZ, which is 15 stocks, also weighted, and that tends to have more of the semiconductor names. So slightly different mixes, but pretty much are doing the same thing. You're pretty much um, either buying long or selling short the biggest tech stocks in the market today. So it's a very easy way of putting on some bearish exposure in the markets that do tend to move the indexes the most. And we're long BERZ, which is the inverse bearish version of BULZ. And if you want to look at some of the components of these, you can just type into Google BULZ Holdings, FNGU Holdings. This is the FNGU Holdings. Here are the top 10 companies. You can see a little bit more on the software side of things: CrowdStrike, ServiceNow, Facebook, Amazon, Google, right? Cloud names, software names. Microsoft is in there. And then if you did the same thing for BULZ, you're going to see that it's a little more weighted on the semiconductor side. You're going to have NVIDIA and Intel and AMD and Avco and some others. All right, back to the chart. So S&P, waiting for the signal to play out. I don't think it's going to get too far. I suspect it'll meet up and kiss the 21 period moving average as it did last time. Now it did time before that. It tagged the 21, bounced a little bit, and then it was right back down. I think that was just prior to the election. Yeah, that was a couple of days before the election. And here's the big election bounce. So back down into the pink zone. I don't think we're going to get to the pink zone this time. I could be wrong, but that's just my best guess. Here's another tag of the 21 period moving average, and here's a travel into the pink zone. So flip a coin. Do we go to the 21? Do we go to the pink zone? Do we go to the 50 period moving average? Right? All of those are possibilities, but we just need to let this play out. We need to be very cautious this week on the long side. Now, the one thing we did do, we did this a little bit last week and got into a bit more this morning, and that is we bought some China names. Over the weekend, the Chinese government came out and said, we're bullish. We're going to prop up the market. We're going to do whatever we need to do to get these companies back on track. They've not been having a good year, and everything China went way up. So we were able to ride some of that from last week and this morning. The other thing that is really looking pretty good today is shiny metals and miners. We're also riding some junior miners, and we're probably going to get into some gold later this afternoon before the close today. I think it was either Goldman Sachs or JP Morgan. If anybody knows in the room, let me know. But they came out this morning saying that they see gold going to 3,000 not too long from now, and that would be about a 10% move from current price. So we would like to catch some of that. Not that that's going to happen overnight. We're pretty short-term traders, but it is set up, as you'll see in a moment, for a pretty good bounce. All right, so S&P, bearish, near-term, bullish, longer-term. That's our map. QQQ, just a fresh, as of today, fresh bearish divergence signal. You can see that these do tend to have pretty strong responses when they show up, but they do tend to be very short term. And that's true of any divergent signal, whether it's a bullish or bearish divergent signal. Sometimes they only last a day. Sometimes they last several weeks. Sometimes they can trigger, further selling down the road. But most of the time, it is a short-term signal, but it is a signal that needs to be respected. So that's what we're doing. I don't think we'll get short the QQQ in part because we already have BULZ on board, or BERZ on board, which is pretty much the same thing. Also, the NASDAQ on the way up was a lot stronger than the S&P 500 on the way up. And that kind of upside momentum, when you do get a pause, when you do get some consolidation, tends to be harder to fight against on the way down than it was on the way up. So QQQ not quite as bearish in my opinion as the S&P, but we do need to respect this new signal that we just got today. Small caps were up. They were up. It was a gap and crap today. Gap up, crap to the downside. Friday, as you can see here, let me zoom in a little bit. Friday printed an inside day bar that is typically at the end of a little pullback as we got here. An inside day bar would be a bullish reversal. We got some follow through this morning, went up a little bit higher after the open, and then right back down again. So not a real good look for the small caps, but we are playing the small caps with TNA, which is the 3x bullish version of the Russell 2000, but we're doing it with in a way that's capped. We have a bullish put spread on this one, so it can still come down a little bit. We'll make money. If it goes flat, we'll make a lot of money. If it goes down a little bit, we'll make a little bit of money. We're only going to lose money if it goes way down. So we're modestly or cautiously bullish for this week on the small cap index, but as of today, not looking all that good for the next couple of days. All right, so here's gold. In fact, let's look at the MGC, which is the futures contract for gold. You can see this is a better chart because it gives us the overnight data. And here's a chart. So from the top of the LRC all the way to the bottom, that's a pretty rare move. Very long and determined pullback. And that was mostly in response to the election. So the election came out, and with the shifting understanding of what potentially could happen to the economy, gold suddenly fell out of favor. Bitcoin fell in favor, gold fell out of favor, and now I think we're starting to see that shift around a little bit. Bitcoin is starting to get a little bit soft, gold starting to pick up a bid. And as I said, it's either JP Morgan or Goldman Sachs came out this morning and said, yeah, we're, thumbs up on gold for the next few months. So we had the breakout of the post-election pullback. We had a big slam the other day. I'm not quite sure what that was in response to. We bounced back up. I don't know, was that at the beginning of last week or the end of the week before? One of those two. And then the sideways, right at the 21 period moving average, if you can see that, this little sideways base, right? It's a bullish base because we're down at the bottom of an uptrend of a downtrend pullback. Bullish base right across. 1, 2, 3, 4, 5, 6, 7, 8, 8 bars. Today is the first day that it looks like it's going to break out of that. Now we went way up there to 2,700, tagged that nice round number, pulled back in to 2,685, which is kind of where it's at right now. We'll have to see how this closes, but I've got my eye on it for a long in MGC over the next week or two. All right, we'll keep an eye on that and I'll let you know. So let's go to, let me go to that. With that discussion of the indexes, let's go over to the MAGS list and we'll show you what's going on there. We've got some good things going on in some of these and some not so good things. So the AMD, just still a no-go zone. Give us a little bit, just a little bit of some hope that this pullback line, I don't know if you want to put it right there or if you want to put it right there, but either way, there was some potential of getting up to testing that RTL, that resistance trend line, with some bullishness, pretty decent volume coming in over a couple of days, and then it's just boom, 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 down, down, down on increasing volume. That's not good. That's really not good. AMD is still a no-go zone, and I don't know when it's going to get back on track. So what is AMD fighting against? Well, there is competition, but mostly this is about declining sales in your PCs, right? If they're not using, if people aren't buying PCs, they're not buying AMD processors. So same is true for Intel. Same story for Intel. Just a little too much competition and not enough demand. And boy, both of those are double whammies. And I don't see AMD coming back anytime real soon until there is some new form of computing, and there is that out there, right? Quantum computing. Um, but I think NVIDIA has the market on that, on the kind of high speed processors that are needed for that. Don't think AMD is there. All right, NVIDIA is, this is a kind of coin flip for me. It did break down of this little, um, if you can see it right here, this little pop, right? About 4 or 5 days in a row, pretty good upside. Then Thursday last week, we got the doji at the top of that um, little bounce, and then the 3 bar reversal followed through on Friday, and a gap down today. Now it did hold the 50 period moving average. That's good. We're not too far from the pink zone and an uptrending LRC. That's also good. But now we're below the 21, right? Bad things happen below the 21. Good things happen above. We're also below that slanted support line, and I just think it's just going to be kind of dead money for a while. Now this box right here, this yellow box, very very strong support, right around 132. If it gets anywhere near 132, I would say go ahead and buy some. But if you bought it here at 138, I think chances are pretty good that you're not going to be making money for a little while. So let's not worry about NVIDIA. CRM, big power gap up to 52-week highs on earnings, which is where you want to see the power gap coming in on earnings. A couple of days of holding those. Now we're starting to get back into that gap. I don't think, because of the strength of this company, I don't think that gap is going to close all the way. So this is one to watch. It's not yet on my greens list, but it's one to watch as a hold of the gap and a reversal back up. And when that happens, you can do a little swing trade on it. Or I would frankly rather see you do something like a put spread, a bullish debit put spread. I'm sorry, credit put spread. So Netflix is rolling over. It's got all kinds of bearish divergence, and we've seen this before that didn't follow through at all. But it's been a while, right? There's one that didn't follow through much, although it went sideways, and that can happen. And you don't want to get stuck in a stock going sideways. You're just not making any money at all. This one got reversed right the next day. Who knows what's going to happen on this signal? But it's not a buy because of that. We need to respect that signal for at least a few more days. Facebook, same thing. Avgo, it had a huge pop on Friday. Really, really nice big green stick. My rule on big green sticks is that you don't buy them. Let's just keep it really simple. Do not buy a big green stick. You're going to end up more often than not buying the high for several days, and you don't want that. You're going to get a better price by waiting the next day, 2, 3 days down the road. Now, there are times when, of course, big green sticks keep going higher and they just get big green stick after big green stick, but that is rare. Doesn't happen very often. More likely, like here's a big green stick, went right back down the next couple of days. Big green stick that gave you much better price the next day. Here's the rare exception, right? 3 big green sticks in a row. You could have bought that first one and had a really nice run, but not up here, just under resistance. So what is the path of least resistance for this one? Probably going to come back, test the 50-week average, maybe the 21, run 173, 172. It's a no-go zone until then, and it's certainly not a short. The momentum is just too strong, and we are in an uptrending LRC. And you've got earnings coming up, probably Thursday? Yeah, Thursday. I wouldn't buy it ahead of earnings. ARM. So this one, we actually tried a little bit of ARM today, and it didn't work out. But this is one to keep on watch. This, in fact, in my opinion, this has a better chart, a better potential long setup than NVIDIA right now. It is in this consolidation wedge, right? You're coming into an apex. This is a semiconductor play that is not dependent on PC maker as you have with AMD and Intel. So it's a little bit of a different play. One of the best IPOs that came out last year, and it hasn't gotten back up to IPO highs. So there's still a lot of good upside potential. Forward earnings are very good for this one. So I think this will likely have the breakout to the upside. But when that happens, who knows? It could be a month from now when this breaks out. So it could get all the way to the end of December and not break out. I thought because of it was holding up quite nicely on Friday, gave us a good green candle. It was green earlier today. Looked like it was going to get some follow through, and it just did not. Let's try Tesla. So Tesla's in. You can see this is a major shelf up here. If we look at the weekly chart, you can see how it got up into this area around 400, right? Nice round number. It got up to around 400 several times back in 2021, 2022. Hasn't been above that level since. And now we're back up there again, which is a beautiful run. Absolutely beautiful run, but not the time to buy it. Today is not the day to buy Tesla. I'm not so sure. I kind of thought we could short this one. I'm not so sure that's the best play either. I do know some guys in my pro trading group who got into some puts this morning for Tesla. Yeah, I'm not going to join them, but let's keep an eye on it. I think we can probably buy this when it dips down to about 360. Google is very nice. We're long Google. It is in breakout mode. It's got some follow through today on a weak market day, which is always a good sign. And the MAs are stacked now, and they're starting to all turn higher. That's good. That's what you want to see. Volume balance has been really good. So if the market itself, if QQQ is coming down, you're probably not going to see Google do a whole lot of anything. But once that pullback is done, maybe by the end of the week, we should see Google start to catch a good bid. It's a good one to be long. It's a good hold. If you're looking for something and you just have to buy it, I would recommend Google. It looks pretty good. Microsoft breakout, boom, 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 like 7 or 8 green candlesticks in a row. Now, however, we are at the top of the LRC. It's not a very strong LRC. The 50 is below the 200. There are some problems in this chart. So it's not a buy, but if you're already long Microsoft, if you played that breakout, God bless you for doing something really cool. But take some profits off the table, trail up your stops. Amazon, pretty much the same story, right? Boom, 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 boom. Now we're printing what looks like a potential reversal bar. If we get a red bar tomorrow, look out below because it would be ready to come in quite a bit. One Apple is just Apple. I'm embarrassed about Apple because when it was down here and the QQQ, the Nasdaq 100 was up at 52-week highs or almost there on the election, and Apple was doing nothing after the election. I thought this is very bearish, and I was really worried it was going to break that little support line right there and then roll over and come way down. Well, it didn't. It surprised me very much by getting back up above the 50, the 21, and then just having this beautiful run all the way up to the top of the LRC. It's not a buy up here, but it's certainly not a short, and it would certainly be a good hold if you're already long. So let me run real quick through my greens list first. Let's look at the worst to best. Cava had a big slide today. Not sure exactly why. I did read in the live room that someone was mentioning an insider selling. That could be it, but it seems like there's something else going on here. But given valuations, given growth, and given that everything is still uptrending, I suspect that this selling is overdone. It's not yet a buy, but if you want to go over to the hourly chart, you can start to see where that buy signal might come. We looked like we almost had one a little bit ago, but what you want to see is a reversal bar with volume bigger than the previous hour. So we're below the LRC. The LRC is uptrending. The market bias is green, not a strong green, but it's green. All of those tend to trigger some bounce back to the upside, but it's not quite there yet. We'll keep an eye on it. That would be a nice bounce back. I mean, this can go up 10% in a couple of hours. Coin is It is a tough read. Same with Bitcoin. It's just very choppy. It's up one day, down the next, up 2 days, down 2 days. We did have this breakout of a nice little wedge. Sure looked like it was going to do well. We were long that one, and we did get out with some profits, but we had to move up our stop, and then we got hit on the profit stop. And then it went up the next day, and then it's way down again today. So, but let's see if we can get maybe back down to 300, do a little bit of a reversal. We can get back on board a little 2 to 3 day swing trade. That's about all I think that coin right now is worth doing. Little short term trades until it gets back on track. This is just a mess. Right? This whole thing right here is a mess and very vulnerable to the downside as well. We've also got bearish divergence on the top of this little higher high. That's not where you want to see it. Root is a pullback to the 21, not looking very good today, but anytime you tag the 21 in an uptrend, that's a pretty good place to look for a long. IoT is a software name all the way down to the 50, the bottom. I don't think this is very good. This is a down on earnings, so I'm going to remove that one. We looked at NVIDIA already. CMA is a pullback into the pink zone of an uptrending LRC. That's usually where you want to buy it, but you need a buy signal. We're not there yet. SHOP was a power gap hold on the pullback, testing of new highs. It's not a buy. I'm going to have to take this one off. It was a buy signal down in this area, even up in this little handle part of that cup and handle pattern, but not today. So Teladoc had some interesting stuff going on. A few days ago, 2 of 3 really big green sticks, bit of follow through, and then a soft pullback into the rising 21 and the 200 in an uptrending LRC. What happened there was that they came out with Investor Day, and the market really liked what they heard, and then it got, I think it was a buy, an upgrade and a price target raise, and lots of good buzz online. So this is of course, a COVID play that during COVID time, of course, it was great. It was way up there, triple digits. Now it's come way back down. It's a med tech play, but they have a new product line, and IBD, Investors Business Daily, William O'Neill. One of the big things he likes to look for is a new product line, and Teladoc has that. So let's see if it can get back on track. It's not a buy today, but we're getting close to one. We looked at ARM. The regional banks are down to the 21 period moving average on a soft pullback. We have to wait for a buy signal. They're not there yet. Same for the big banks. Here's a good looking bank, a regional bank that is down to the midline 21. Nice soft pullback. I think this one actually could even be bought today. XLI is the industrials down into the pink zone of an uptrending LRC. The transports are the same. Nice little doji down here with a little bit of bullish divergence off the 50 period moving average into the pink zone. That's a buy signal as far as I'm concerned. It's not a green candle, but as a doji, you're very close to it, and you've got some very good volume coming in today. Real estate, green candle, 50 period moving average, uptrending LRC, freshly stacked MAs. Everything looks good, oversold stochastics. We looked at Google. Energy is, in my opinion, not a buy because it's been a really tough read lately. But this is an inside day bar on the 200 period moving average in an uptrending LRC, possibly printing a near-term bottom. Home builders are down to the 50, the 21 on a pullback. Not a great setup, but there aren't too many great setups out there. Mobileye is your autonomous driving software play. This is not a real good chart here, but it's getting a lot of buzz. It is scalloping higher. We could call this a little bit of a handle on this really nice rounded bottom cup. How high is it going to go? Don't know, but this does look to me like it wants to get back on track. And then here's one of the better China plays, online retailer that broke out last week, and big follow through today on the weekend news, and still a lot of good upside in this one. This could go to the upper 40s from 41.69. Quick look at our reds list. A few that could be possibly setting up for shorts. We looked at SPY and QQQ, BRZE, downtrending LRC, reversal, divergence, earnings coming up though, so that's a no-go zone. We looked at Tesla. Roku, I think, also potentially, it's not the best setup, but you do have the reversal bar today. You've got bearish divergence coming in. Actually, I don't really like this. Because it's the big gap up and it's holding the gap. That's a power gap. Holding the power gap. I'm going to remove that one. ARKK, big reversal today. It's not necessarily a short, but it does look like it wants to come in a little bit off of the bearish divergence. Same thing for Hack. Same thing for Sky. CLS, bearish divergence. A lot of bearish divergence. So we're just seeing this all over the place. Anything software related, cybersecurity related, cloud names, they've just gone a little too far too fast. Slammed today, bearish divergence. We're just setting up for a couple of days at least of some comeback. WGMI. So this is the. I just wanted to point this out because I just learned this ticker symbol over the weekend. This is a exchange traded fund for the Bitcoin mining group. And I didn't even know this existed until the weekend. So, and it seems to be pretty liquid, a good way of either going long or short the Bitcoin miners, not the Bitcoin itself, but the miners. So you're going to get Coin and Riot and Mara, all of that in there. Okay, so that's all I've got. Let me pause the video. We'll end it here for our YouTube channel, and then I'll get back into the room and we'll look at chart requests, whatever you're interested in. God bless everybody. Bye for now. We'll see you back in the room in just a little bit.